Good evening, traders. Sam the Trader Geek here with your Thursday, March 12th, 2026 market review and preview. Well, it wasn't a great day, trading day, at least for the markets, and you can see the results here. But hopefully you had a better day or sidestepped some of the declines or maybe even short. So we saw everything today in the red as SPY, Dow Jones, NASDAQ 100, mid cap. I don't have to recount that for you. So everything in the red, the worst of them. The smaller they were, the worse they did, except mid caps were down 2%. And the best of the lot was the S&P 500. All but two sectors were in the red today. Utilities up about 0.75%, and energy almost up 1%, obviously with crude prices. And nothing in factors were up today. Everything in the red. Global equities also taking it on the chin. So basically, nowhere to hide today. All these countries in the red. I guess Brazil took it on the chin. And bonds yields were rising across the spectrum of treasury bonds, aggregate bonds, inflation protected bonds. You want it, you got it. It was in the red. Rates rising today, ahead of a barrage of economic data tomorrow, which we'll talk about in a minute. Platinum losing about 2%, but half and half kind of on the commodity front. Gold losing about 2%, and so did silver. Just kind of range bound consolidation for the precious metals the last few days, and just kind of going nowhere after that big decline at the end of January. Agriculture and oil up 6%, and then you can see dollar strength in light of geopolitical problems. So that's kind of the day, and you can see the rest of the 5 days. So we're only thing really positive this week. Well, I guess there's more than 5 days. I guess that includes last Friday. So kind of half and half. We'll see tomorrow. Of course, is the end of the week. Taking a look at our tri-pane of charts, as I usually do, we've got the daily chart, weekly chart, and the monthly chart. We'll start with the daily. Ugly stick here under the 150-day moving average, this light blue line, and outside the Bollinger Band. So we started selling this morning and didn't stop till the bell rung. And a little bit after hours right now, we have a little bit of a bump in the futures, not much, but we've got so many economic reports in the morning, who knows? And of course, geopolitical risk of news overnight, you just never know. So we're about 72 points away from the 200-day moving average. And as you can see here, we are right smack in the middle of this 224-point options implied expected move for the week. So we're right in the center of it. And if you look here, this was Monday, a nice recovery candle after a big dip, little bit of rally on Tuesday, and hitting 100-day resistance up here, and then coming right back down under the 150-day. So the try as they might, the bulls could not muster enough to get more short covering and at least get us to the 50-day. So we've got a bearish chandelier stop and a bearish PSAR stop. Both of these are in the red on the daily. Obviously, the MACD is definitely negative, and of course below the zero line. So it is on a sell signal, but it won't take that much to flip it over. We are pretty oversold on most indicators. And we have an RSI, relative strength index, at the 35 level, not too far from the 30 level. And you can see, going back a little ways, the last time we really got to an oversold level, I'll go to the weekly chart, was 331 of last year. And over here on the daily chart, you can see we never really, how close did we come in November? We got to the 34, 35. So this is where bounces have formed in the past, and conditions are definitely ripe for a bounce. We just have to get a bit of good news to get that bounce. Flipping over to the weekly chart, we've got a bullish chandelier still on the weekly, and that's this dotted line right here. If we get a close below there, that will flip that chandelier stop. That is a volatility stop. And we have a bearish PSAR, so that was taken out a couple weeks ago. We got two different stops. Bearish is more of a average true range. We're below the 21. We're below the 8 weekly. MACD has been on a signal for on a sell signal for weeks, and we have the RSI middling right in the neutral level, about 47. And you can see clearly that we are now continuing to one time frame. And if we end a week like this tomorrow, then we've got a big topping tail even here. But that doesn't mean a whole lot since we're already in a downtrend on the weekly. Switching to the monthly chart, bullish chandelier, bullish PSAR. Looks like a MACD that wants to flip over, but we're not even halfway through the month yet. I guess tomorrow would qualify as halfway. Well, Monday would be kind of the midpoint of the month, the 16th. And this is obviously the third month of the quarter, so we're coming to the end of the quarter. And look at that. Well, it looks like we might be peaking a little bit below the 70 RSI overbought level on the monthly. So we're definitely seeing a change in character. We're today was really persistent selling and not much of in the way of bounces that we saw. We definitely took out the December low, which was 67.20, and we closed below it. And I should have mentioned that on the daily, but here it becomes more obvious. Taking out the December low is not a good thing. So we're next headed for the November lows, which are 65.21. And that's not too far from coordinating with the options applied expected move for this week. We could get down there tomorrow if these economic reports or geopolitical news wants to bounce us down that way. That's only what, 100 and something points, but hopefully we don't. There's your 100 week moving average. I think that's yeah, no, that's the 10-month moving average. I'm sorry. So that's another technical point for a lot of trend following systems, that if they close below the 10-month moving average, and obviously that doesn't count until the end of the month, but we don't want to see it close below the 10-month. You can see here, we got 1 month, we bounced and we continued. Here we got a dip below for 1 month and we continue back up. So it's not a fatal to the bull market, but it definitely is not a good sign if we close March below the 10 moving average on the monthly. Little funny thing here, I'm going to just posit something here that you might find interesting. Look at where we ended, 666.06 on the SPY. And for those of you who remember the where we bottomed out in 2009 at the bottom of the bull market, it was 666.79, but that was on the SPX. Here we have 666.06. And you know, some people call it the sign of the devil or what, or something, anything bad. But it could also be, you know, algos can be funny that way, and Wall Street can be funny that way. They could muster up a rally here and say, call it 666 the bottom, and we rally hard from there. Stranger things have happened, right? So I thought it was interesting, 666 over here, and we'll see if 666 portends anything bad or maybe a short-term bottom. We'll see. Switching back here, let's go to the NDX. We have another ugly chart under the 150-day, right at the lower Bollinger Band. We're not too far, a couple hundred points from the 200-day. And you can see that on a MACD basis, the NDX was a bit stronger than the SPX over the last several days. Very choppy, you know, looks like the fast line is going to trip over. Looks like it wants to flip over the signal line and hasn't done that. We are still below the zero line, so MACD is definitely on a sell signal. a little bit more relative strength than the SPX, but still at the 40 level. Call that no man's land. And we are under all the major moving averages except for the 200-day. The NDX had an options implied expected move of 920 points, 925 points for the week. And you can see we're not even, although we're seeing 400 point ranges in a day, we're not even close. We're right in the middle of the range here. We're not even getting close to the upper edge or the lower edge, which ends tomorrow, obviously, with the end of this week. Bearish chandelier, bearish PSAR, definitely a bearish chart. All you got to do is draw a trend line, and you can see here. There you go. And what are we down? We are about 5% from the all-time highs over the last 43 days. But there's your trend line if you want to draw it. There you go. That's my chart magic or chart nonsense, if you will. Looking at the weekly, we've got another topping tail here. Doji, topping tail. One more day to go in the week, but not looking good. We are in a downtrend, as this lovely line tells you. MACD on a sell signal. RSI middling right at the 50 level. So not good news here. Bullish chandelier, that's that green line here. We don't want to close below the 24, call it 140 level, and flip that chandelier. So we have two strikes against this weekly chart. I saw some stuff being circulated today about the 12th being kind of the bottom of March, but as far as I'm concerned, all bets are off when there's geopolitical events happening, and you've got oil prices that keep flirting with the $100 level. So take it for what it's worth. Seasonality in the first half of March has not worked out. We'll see if it works out in the second half. I kind of have my doubts until we get some resolution to some things. And we do have an FOMC meeting coming up next week. So we'll see whether they start talking about softening their stance on interest rates. My gut feeling is they will not, given the inflation data. Bullish chandelier, bullish PSAR on the monthly chart. You can see MACD wants to flip over also on the monthly. We are under the 70 overbought level on the RSI. So still bullish, all this neutral still. But if we flip this bullish chandelier, that's bearish. And this is definitely bearish, but all oversold. We should have the constructs of a oversold rally that could come Friday, but again, if there's no resolution on what's happening in Iran, I don't know a lot of traders that are going to want to go home short. So it could be a quick short covering rally for the day, and everybody gets out by the end of the day. Russell 2000, we have the daily chart with 107 point expected move. Here we are below the 150-day, this light blue line, below the 100, below the 50, obviously. And also, again, right in the middle of this options implied expected move. And a MACD that's definitely solidly negative and no signs of a recovery there. Although it'd take a day or two to change it. RSI is at the 34 level, approaching oversold levels. It's more oversold today on an RSI basis than it was back in November. So we could be getting close to a tradable bottom here. Looking at the weekly chart, again, there's your topping tail. We're holding on to that bullish chandelier stop, and we do have a bearish PSAR for the past couple of weeks in a downtrend. MACD flipped over, no doubt about it. This is on a sell signal. We've got a middling RSI at the 48 level. For the monthly chart, we definitely have taken back all of January's nice action, kind of opposing candles, one red, one solid green, one red. So we're basically giving up all the gains, and it's not just for the Russell Index, by the way, but what a shame. This was looking really good, but this topping tail kind of portended a doji, and now we're down. Month is not over, so you never know what might happen from now until the end of March. Lots going on that can change the face of things, not the least of some type of resolution or some type of um, answers as to how far this conflict is going to last for us in the coming days and weeks. So call this still bullish. I'm going to call this bearish and bearish. So bears have the edge in the short term, long term. Still, it is the bulls market to give up. Take a look here at the VIX. And we had back up to the 27 level. This is about one standard deviation above the norm. The average is 19 and a half over the lifetime of the VIX. So this is one standard deviation. And we did hit a few days ago, we hit that 35 level and came right back down. And now we're heading back up again. MACD is definitely positive, and RSI is not overbought yet. So you could see further gains in volatility. Chandelier and PSA are positive. Here's the weekly chart. Still a red candle, but we've got one more day to go. Depends on, I think, economic news and geopolitical news as to what happens. But the other thing of concern is the VVIX, and that has not settled down at all. We've got a 130 VVIX, and anything over 110 is attention grab. And this is a measure of institutional VIX call buying, and they are definitely not selling their protection. They are still buying it and holding on to it. So anything over 110 is concerning. Under 100, we'd rather like to see, but pretty sure we're not going to see it this week, maybe next week. But in any case, volatility signaling that traders, institutions are not giving up their protection just yet. Switching back to the VIX, something I mentioned in the note today is the pricing of the VIX options. The VIX closed at 27.29. Let's call it 27. And if we look 5 days for the next VIX expiration and the VIX futures expiration, if we say call it 27, the 28 calls, they're going for about $1.45. And if we go out to the 26 puts, they're trading for about call it 227 as the midline. So puts are definitely priced more than calls, but I want to go out a little bit further in time to the next monthly expiration. Looking at the 28s, pricing out at about 254, and go to the 26. These are pricing out about 470. So 2x on the put side versus the call side. Not much. This gives the edge to the bulls, meaning that if there were a lot more downside to come, the puts would not be priced twice as much as the calls. Doesn't mean we can't go down a little bit further, but it does mean that there is some put buying in the VIX in anticipation of a pullback in the VIX, which means a rally in the market. SPX, we take a look here, see what we have left for tomorrow's remainder of the week. 78 points out of that 224 points that we had. Is that right? Yeah, 224. So we have at least more than 1/3 of them reserved for tomorrow. So keep your helmets on. 78 up or down tomorrow, and we could see all of it and then some. What's it looking like? Next week is triple witching expiration. So futures, options on futures, and index futures and single stock futures all expiring next week's. But just looking at it from now, and this is way too early to take a look at what next week looks like, but it's still elevated 232, but this does not get set until 4:15 Eastern time tomorrow. But no let up in the volatility is what I would expect until we get some type of snapback in the market. One last thing to look at here, economic calendar. What do we have for tomorrow? Well, we have durable goods, GDP. I think this is a second look at fourth quarter GDP for 2025. PCE, the Fed's preferred inflation measure, consumer sentiment, and JOLTS. A lot of data being dumped tomorrow, and we'll see what kind of effect that has. But most everybody wants to make this about what's going on in Iran, and that is true. But we also have private credit issues. We also have um, concerns about interest rates and concerns about the jobs number that came out. So there's my guess is any rally on good news from Iran is going to be a relief rally of several days, but we're going to go back to concerns about not reducing interest rates and what's happening with the economy. Are we going into a recession? But for the most part, what I think in the short term is we could see a relief rally tomorrow, or maybe it waits until Monday, until the weekend risk passes. If you're short, then hopefully you covered some of your shorts today and you would look to get long some stuff. And if you're long, don't sit with anything too long. If you are buying options, make sure you're either buying spreads instead of calls or going deep in the money looking for at least an 80 delta or higher. I usually go with about an 85 delta to offset that collapse in the volatility level. Well, that's all I have for this part. I hope you have a great trading day tomorrow and the day looks a little better for us. Thanks for watching. And I'm Trader Geek Sam at Trader Geek on Twitter. Give me a follow if you don't already do so. And I will talk to you over the weekend.